What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we continue to see the bears pushing lower as the bulls are now losing their support trend line. It's do or die for the bulls as they are now sitting at critical support and at increased risk of the bears driving prices much lower. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's SPY was down 1.44%, and you can see here on the chart the bulls did lose their support trend line and the 20 rising daily moving average, which was that support zone between 396 and 397. So it's looking more and more likely that the bears are winning this battle, which is no surprise because we are still in a bear market as long as we're below the bear market resistance trend line. Now do keep in mind, if you are shorting from up here at this resistance, you will want to start locking in profits as we approach this very critical support, because this is exactly where you're going to expect to see the bounce in the event the bulls step in at these levels. That critical support zone is going to be the zone right around 390 to 393, and that is going to be the do or die support, because below that the bears will drive the bulls all the way down to fill the gap at 381. So the bulls lost their support trend line, so they instantly became a lot weaker today, and if you're still bullish on this market, you need to be managing your risk down here at 390, and hopefully you did not get bullish up here at resistance. Remember, this is the big bad bear and this is the big brain bear, and he only steps in at the appropriate time, so it should be no surprise we're seeing the sell-off from 408. Now the bulls have a lot more to prove, because so far it's the bears proving this is still a bear market, and the bulls still need to drive their way all the way back up to that resistance trend line and try to get that breakout above 408. So right now the bears can lower their risk level down here to 400 and start shorting the market on a bounce if we do get a lower high. So you're going to continue to see selling pressure through the rest of the month of December, at least until the bears come down here and fill this gap at 381. So there's going to continue to remain the path of least resistance lower as long as we're below the bear market resistance trend line, so do keep that in mind. Now also note, we're not seeing high volume selling, which does tell us there's a buyer strike, so even the bulls know this is not yet time to step into the market, and that is why we're able to see these drops on such low volume. Remember, volume doesn't move price, so you always follow price. If you're sitting here wondering that the market can't go lower because there's not high volume selling, it only takes one day to start seeing high volume selling. So you need to make sure that you're only using volume as a reference. You should be following price first and foremost. Remember, price is the only thing you're trading, so volume is just supplementary to your analysis. And right now, at any moment, we could break this support at 390 and instantly see a high volume flush. So respect this very critical support at 390 to 393. And as I already said, the bulls are getting weaker because we're already losing some critical support that the bulls failed to defend. So it's on the bulls to prove everything, because the bears have proved once more that this is still a bear market and they are still in full control. On the Nasdaq 100 triple Qs, we were down 2.07%, and the triple Qs also had the rejection from the resistance at 293, which is looking more and more likely that it could be starting to look like a double top from 293 once we break down below this neckline at 280. That easily sends us down to fill the gap at 268 from that double top confirmation from the rejection of 293 and break below 280. So keep in mind, you need to get a lot more risk off if you are still trying to be bullish if the triple Qs lose 280. Now as bears, you're staying bearish while we have the rejection from 293, and you can now also use the risk level right here, right around 289, because there is the possibility we continue to get lower highs and lower lows. You will need to move your risk levels if you want to continue to manage your risk on the way lower. Now we are getting a Bollinger Band squeeze, so that is something we will have to factor, because usually when you get Bollinger Band contractions, there is a period of high volatility coming. So I continue to tell you, December is looking and shaping up to be a very volatile month, and so far it's favoring the bears. So watch that very critical support at 280, because below that we're going to fill the gap at 268 and possibly even retest the lows at 260. The bulls need to break through the resistance at 288 to 289 and then 293, and then the bulls can try to test the negatively sloping 200 daily moving average, which is right around 304. On the Dow Jones DIA ETF, we were down 1.05% today, and we also did lose another support zone, which was this level at 337, and we did get a daily close below the 20 daily moving average, so it continues to look like the Dow Jones is following our arrow down to the price target at the gap fill at 331. Remember, we're looking for the Dow Jones to roll over and die, because this is a very sharp bear market relief rally that is likely going to end with the weekly gap fill down here all the way at 285, because it's very unlikely that this bear market is over. So that is a lot more downside, and we also do have this gap down here at 311. So the gap fill at 331 is just a very early beginning of what could be coming around the corner. So continue to manage your risk as bears at that gap fill at 347, and you can now also use the risk levels at 337 and 342 because those are possibly going to be where the next lower high is, but the end goal is still going to be by mid-December closing this gap at 331. On the Russell 2000 IWM ETF, we were down 1.53% today, and you can see right here on the chart that we did confirm the double top from the resistance right around 188 because we did close below the neckline at 181. This is a very clear double top rejection, which is obviously bearish, and we still have the gap to fill down here at 178, but we're more than likely going to continue lower down to 176 due to the double top. Below 176, we can retest the daily low at 174, and then below that, we're likely coming all the way back down to retest the 52-week low. Upside resistance will now be 182 to about 184.5, so watch those resistance levels because so far it's the bears that are in full control with the double top rejection. On the ARKK ETF, we were down 4.02% with the continued rejection from the negatively sloping 50 EMA and very close to fully closing the gap at 34. At this point, it's a no-brainer that that gap is very likely getting filled as soon as tomorrow, and then below that, look for a retest of the low at 32.5 or a brand new 52-week low down here at 30. Critical upside resistance will remain 36.5 and 38 until we get the bullish breakout, and then we could possibly see a retest of 40, but so far this is lower highs and lower lows as the ARKK continues into a bear market. On the VIX, we're up 6.74%, and we are seeing exactly what we expected to see, which was a spike in volatility from this support zone. So I continue to warn you, this bear market is not over just because the VIX is going lower. The VIX is going lower, which is allowing bears to load up on cheap short positions, and that is exactly where the bears are going to step in. This has been the trend all year long, and this is typical trend in a bear market. So do not get overly bullish just because the VIX is heading lower. That is where the bears are going to continue loading up. Look for the next upside resistance in the VIX up here at 24. On Bitcoin, we're currently flat, sitting right around the $17,000 resistance, and we are still below the resistance at $17,550, which is going to be the resistance the bulls need to break to get to the next leg higher at $19,000. Critical support remains $16,000, and on a break below support, we're going for that next leg lower at $14,395. On Amazon stock, we were down 3.03% as we met our downside price target, which was that gap fill at 89.5, and continued lower and closed down right around 88. We're very likely going to retest the low at 86, and if the low fails, we could come all the way down to the next leg lower at 77. You're remaining bearish below 97, but you can try to be bullish off the double bottom, but keep in mind you need to manage your risk on a breakdown below 86. On Microsoft stock, we were down 2.03% as we see Microsoft coming back down to retest the rising 20-day simple moving average and 50 EMA, and we did get a daily close just below the support trend line. So you're definitely getting mixed signals with Microsoft looking like it's trying to roll over and die, but also still holding up above a rising 20 daily moving average. If you're waiting for bearish confirmation, wait for the breakdown below 242 because very likely if we break below that level, we are coming down to fill the gap at 228. Upside resistance remains 252 and the daily high at 255. And if we can break through all of that resistance, we should have no trouble filling the gap above at 265. On Nvidia stock, we were down 3.75% as Nvidia closed right on top of the rising 20 daily simple moving average, which is that support zone at 160, and we also have critical support at 156. If we lose all of this support, we're very likely going down to fill the gap at 142, and we have upside resistance at 166, 171, and 175. On Tesla, we were down 1.44% as we continue lower in this bear trend, and price action is still below all of the moving averages, but we are still holding above this support zone right around 175 to 178. If all of this support is lost, we should have no trouble filling the gap at 170 and retesting the low, which is right here at 167, and possibly even making a brand new low at 163. This is a clear downtrend while we're below 197, and on a break above 197, it is very likely that we will try to run up to 230, but wait for the price action confirmation to get the bull breakout. Otherwise, the bears are still in full control and we're heading lower. On Apple stock, we were down 2.54% as Apple is continuing to show that rejection from the resistance trend line, which was that resistance between 148 and 150. And we are now closing back down below 146, well on our way to retest the lows at 141 and close the gap at 138. Below the gap fill at 138, we can still go lower to retest the low at 135 and close the gap at 133. So by no means is Apple done going lower just because we close one gap. Stay bearish as long as we're below 146 to 147 because that is now the critical resistance in this bear trend. The financials were down 0.88% today, coming right back down towards this gap fill, and the gap has not yet filled, so we likely have more downside coming in the financials. The industrials were down 1.18%, closing below the rising 20 daily moving average and still has a gap to fill down here at 97. The healthcare sector was down 0.76% today, still looking bullish with both the price action and trend, so you can continue to stay bullish in healthcare. The energy sector was down 2.64%, losing the support at the 50 EMA and coming right very close to our price target of support at 84. This level has to hold or we're going to see energy rolling over and dying, coming all the way down to fill the gaps below. So jumping back over to the S&P 500, this is extremely critical support for the bulls and they're already starting to lose some very important support levels. So without a doubt, the bears are still in full control and this is very obviously still a bear market. I continue to tell you, let the bulls prove everything because at critical resistance, it's on the bulls to prove they can blast through resistance and you should be assuming the trend is going to remain intact until proven otherwise. We follow price action and trend and right now the larger degree bear trend is still overtaking the short-term uptrend and today was the first sign the uptrend is weakening with the loss of the support trend line. So continue to expect a very volatile month of trading in December because it's going to be a very wild ride and we could see the bears trying to push us down for that next leg lower. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching everybody. I hope you're crushing this market. And as always, I will see you in the next episode.